What's going on, guys, and welcome back to another video. So in today's video it's going to be a follow-on from yesterday's, where we discussed my overall trading 2-on-2 portfolio and the effects that the drop in the market yesterday had on my overall portfolio performance. So in today's video we are going to talk about what I have done since then to improve my dollar cost averaging across the board, and we can see how my overall trading 2-on-2 portfolio is doing right now, and we'll have a look into all 12 of my portfolio pies. But as always, if you're new around here, please consider smashing that subscribe button, as we're currently just 4 away from our next goal of 350 subscribers. So with all that being said, let's dive right into my trading 2-on-2 portfolio. So here we are on my trading 2-on-2 portfolio. We can see yesterday that we dropped down. It was about here where we started to dip, so we were up about 3% or even 3.5% at some stages, and yesterday we had a nosedive down to, let's say we went down about under 0.5%, so we went down about 3.5% yesterday in total. And we can see here the injection of cash that I put in. I put in €300 yesterday to help improve some of my 12 pies that were in the red, to improve my dollar cost averaging, and we are currently now up about 1.1%. So it's not bad considering yesterday we were down about 3%, so that's about a 4% swing overall since yesterday. The €300, I put €50 of that into my utility pie, I put 100 into the healthcare pie, and 150 into my financial sector pie. That now means that we have over 4% of my overall goal of getting to €100,000 invested in the market, so I'm quite pleased with the progress we're making. Now also I have quite a lot more cash sitting on the sideline for when the markets do dip even more, like we will see now in a few minutes that some of my pies are still in the red, but I just want to wait to see how the markets react when they open today at 2 p.m. or 2:30 GMT Irish time. So I want to see what way they react today, and I will think about it over the weekend then and do more research like I did yesterday, and have more money sitting on the sideline on Monday and Tuesday next week to help further improve my dollar cost averaging in some of my pies that will still be in the red. I also think that I'm going to set up a rule where I'm going to only put further money into some of these pies if they drop below 5%. So that way I believe I'll be getting dollar cost averaging most effectively on those kind of pies, whereas there's kind of not much point of putting, let's say, €100 into one of my pies that is only down 0.01%, whereas it would be better off putting into a pie that is down over 5%. I get a better dollar cost average return in the long term. So as we did quite a detailed video yesterday on my pies, I'll just give a quick rundown today. In the communication services sector, we are up just under 5%, and our three holdings, Facebook is up nearly 12%, so I'm quite happy with that. Walt Disney is down 1.29 and AT&T is down 4.75. AT&T yesterday was down over 8%, so I'm quite happy that it's starting to recover slightly. Communication services, we are currently up 3.8%. Our two holdings are Tesla, we are up 8%, and McDonald's, we are down just under 0.5%. In the consumer staples, we are currently up 0.42%. Coca-Cola is down 0.5%, PepsiCo is up 1.47%, and P&G is up 0.62%. Energy is the next sector. We have ExxonMobil and Chevron. We are currently down 2.15%, and I'm not too worried about that one bit because the energy sector does fluctuate quite a lot. So again, as I said prior, that I will invest further in this pie if it drops below the 5% mark. Next up is our ETFs. I'll start to invest further here as well. The Vanguard S&P 500 is up 1.23%, and a video on Wednesday where I stated that I was going to add in the Vanguard FTSE 100, which tracks the UK. I found that that will help improve my overall diversification, and we have yet to invest here, so I want to have a weighting of 90% in the Vanguard S&P 500 and 10% in the FTSE 100. The financial sector pie is up next, and this is one of the companies where I invested €150 more into yesterday. We are currently still down about 3.15%, which is fine because we were down over 6% yesterday. The 5 positions we have, Visa and MasterCard, were the ones that were down the most. Visa was down, I think it was about 7 or 8% yesterday at one stage, and MasterCard was down over 11 or 12%. So by further adding in money in here, They are currently down now 5.48% and MasterCard is down at 9.47%. I'm going to monitor these once the market opens today and at the start of next week, and if they continue to fall here, then I'm going to start pumping more money into two of these companies. JP Morgan Chase is currently up 2.23%, Bank of America is down just 0.72%, and Goldman Sachs is down 2.28%. Healthcare was another sector yesterday that I pumped money into. I put a further €100 into this sector, and all three are still in the red, but they're significantly less in the red than yesterday. Overall, we are down 3.78% in this pie, in the form of Johnson & Johnson down 3.86%, AbbVie down over 4%, and Pfizer down just under 2.5%. And again, once this pie hits under 5%, if it goes into over 5% in the red, then I'm going to pump more money in here to improve my dollar cost averaging. Up next is the industrial sector. We are currently up 1.31%, and 3M is down 1.11%. Caterpillar is up just under 7%. So it's kind of nice to see some of the pies are still in the green. But again, as a long-term investor, you need to realize that the markets go up as well as down. And when they go down, then is your opportunity to buy even more to improve your dollar cost averaging, which really does make the difference between an average investor and a great investor over the long term. Next up is the materials. We are currently down 3.35%. And again, as I mentioned prior, once it goes down over 5%, I'll start pumping more money into this pie as we go. Real estate is Realty Income is the one company I have here, and also that I mentioned in prior videos, such sector pies as materials, real estate, and utility pie down below all just have the one company as of now. So I will want to be adding more positions into these sectors in the coming weeks once the markets start to settle down. So you see here, real estate, we're down 0.41%. In the tech sector is my largest sector so far that I'm invested in. We are currently up 5.66%, and that's why diversification is very important when having a long-term portfolio. So for example, we see here that the tech is up nearly 6%, or just over 5.5%, sorry, whereas some other pies like healthcare are down in nearly 4%. So it's very useful to have different sectors that they kind of bounce off each other, both going up and down over the long term. We see here Microsoft is up 0.89%, Amazon is up 6.73%, Apple is up 5.82%, and Alphabet is up over 9% at 9.22%. And the final pie that makes up the 12th pie I own is the utility sector, and we just have the one company here so far as well, Waste Management. We are currently down 1.79%. So again, that's pretty much average as such in terms of how the market has been performing over the last few days. So that kind of brings the kind of end of the video where we had the 12 sectors. And as I mentioned, we are currently sitting at €4,084. We are up 1.11%, which is about €44 in total, or about $50 to $55. It would be very interesting to know how your own portfolio is doing. So drop a comment below. It's always good to see how other people are performing, be it good or bad. It's always nice so we can learn from each other. If this video was any way helpful or entertaining, it would be brilliant if you could consider smashing that like button, as would really help the channel and video out. And as always, if you're new around here, please consider subscribing to this channel, as we're just a few subscribers away from our next goal of 350, so that would mean a lot as well. And finally, next week, we'll make a follow-on video from this and in this 0 to 100,000 portfolio tracker series, where we'll discuss my plans next week. We'll have to see, first of all, if the markets continue to drop or if they go up, and I will make my plans accordingly then. So thanks very much, guys. Have a good weekend, and I will see you all in the next video.